Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, here's your host, Lars von Thienen. Welcome to the Foundation for the Study of Cycles. This is Cycles TV, same place, same time, once a week. Thanks for joining. Hello, Andrea. We are live today. For sure, at the end, I will pay attention to your questions. So today, we need to review gold and cycles in gold. The last time we did a cycles update here on gold has been in December. So I will refer to that session right here. So this was streamed here on Cycles TV, 11th of December. So if you are interested in where we are coming from, that's the cross-reference. And in that episode, I told you, and I think we don't need to see that, I told you in that session, and that's the technical view, that's not the cycles view, but if you review the episode here, you could see, or you will learn that the cycles predicted or maybe expected an upswing into February. Yeah, so this is what I also highlighted here at that technical point. So from December, we said that cycles could continue sideways into an upswing February. So that was the ideal movement of gold prices from that time. So I think just looking into the last 2 months, this guided us very well. But anyhow, we need to look into the future. So let's look where we are today with this, I think, an all-time high in gold prices we have just reached, and to cross-check cycles on gold. And I will also review gold mining stocks. Just upfront, it will not quite be easy with a clear view, but that's how cycles are. So let's get into it and analyze some gold prices here. Okay, we will start with the long-term perspective. Let's bring in some charts here. That's the gold charts here. That's the weekly perspective, long-term view. So we can see now, and I think that's the interesting perspective. Oops, sorry for that. As we see, this is the long-term top here, or even for the past 3 years, we hovered around that period here in a kind of sideways movement. So, and this is just where we are today. So it looks like we have an upbring here to the future, to the upside. But let's analyze what this means in regards to cycles. So from the long-term perspective, this is the basic starting point. Let's use 850 bars for our analysis, which means we use 850 weeks going back into 2008 to today. And by using that analysis, we can see that we have a clear cycle which seems to be active with 243 weeks, which is also seen here in the table view and listed as the most important ranked cycle in regards to strength, Bartels, and the overall ranking. We have 2 smaller ones, but it's obvious this is the cycle to go. Even if we look at the spectrum here, that huge upswing to the left, I would not try to use the shorter term cycles, at least not on the weekly chart. We could switch to the daily if we want to analyze shorter term cycles. From the weekly, looking at this offset here, which I'm looking to, there's only this cycle which we should use. Maybe there's even a longer one, but to identify that longer one, we need to switch to a monthly series, which we don't do here. So let's use that cycle, which is then overlaid as starting point. Let's just cross-reference the key alignments, which I often then recommend just to do. So you know the procedure if you're new to cycles or to this channel. We are looking for alignments in time. So we are looking for, here's the bottom, here's the theoretical bottom. So here's then the price top, here is the timing top here. So here we have not the final low, but here's one interim low, which is aligned with that here. So we have an local top clearly here, which you can spot, which is in alignment with this cycle top here. We have a clear cyclic low in the weekly gold prices here, aligned with that cycle. We have then here and here the key tops aligned with that dominant top here. And then that's hard to identify, but I would count we have this bottom and that bottom with a kind of double bottom at each side of that cycle here, which is quite obvious pattern. So it's not in the center, but it's in this projected downward area. And what is important as a takeaway, if you're new to this kind of analysis, we are looking for alignment in time. So you could draw now a zigzag line from these timing points, which give you then an indication. These are not absolute price targets, which we are analyzing here by using that single dominant cycle. So this guides us or gives us the information that we are in this long-term upswing phase, which by the way just started in August or summer last year. So we could also argue that this downswing period more or less ended here, or this downswing leg, which was just from here to here. So it was just a sideways movement. So, and if this happens, this gives us also a kind of clue how to judge the current environment. So the last dominant long-term downswing phase of the most dominant cycle just resulted in a sideways movement in the underlying price, which is the gold prices. Which means if we now switch to from a timing point now from, let's say, here to here, so that's now the phase from the timing from here to here, where now the next upswing phase of this cycle starts. This could accelerate the price momentum even to the upside. So, and that upswing phase is just in its force. So the long-term cycle suggests that there's a longer upswing cycle now running, which continues into, and I think this is what you will see if you look just at this top here. So this top is in summer next year. So we have a full year now from now on where this upswing momentum long-term cycle seems to continue. So this gives us a positive bias if we look into shorter term cycles, which are then more important to derive trade decisions. But at least that's the condition, that's the longer term perspective we always have to keep in mind. And just before we now leave that short term cycle, I want to highlight also or point your attention also to the technical condition. At the bottom, you see the cyclic swing indicator here aligned to that dominant cycle. And you see here there's some room to the upside moving now into 2025, which would, from a timing perspective, then be a perfect alignment. So this is not how a key top looks like from a technical condition. So there's still room to go. And you can also see from the past situations we had. So here's the clear signal, which is then a buy signal or positive signal, which occurred exactly at that point in time here. And the next buy signal was generated exactly at that bottom here. You see it if you compare the price action and the indicator action. So these have been two long entries, and this long entry is now also confirmed or by this upswing cycle. And you see the past sell signal was issued here, highlighting the price, and you see it from the indicator and no signal in between. So I think here sell and a buy and a buy. That's the beauty of using this kind of cyclic tuned indicators. And just end the story here. This is not a sell signal we have right now. There's still room for continuation of this upward push. So let's now move to a shorter time frame. Let's switch to daily analysis. So this is the daily gold futures price. So we see this peak here, which just happened currently. You see the the spectrum at the bottom here. It's not as beautiful. I mean, there's a lot to talk about that spectrum here. So as we are here to do cycle analysis, let's also focus some time on discussing the peaks in the spectrum here. It's quite interesting. So let's a little bit zoom in. And let's first, I think that's a good example to discuss some ways how to read a spectrum. First, I think from a visual perspective, what really pops up is this huge, I think we can't call it a peak. So this is a very flat, plateauish a peak here. You see from a mathematical perspective, you could identify a top here with a length of 291 days in that case. But if you deal with these flat observations in a spectrum, this peak could be anywhere here to the left or to the right. So I would count we can not really identify a valid cycle length at that plateau here. We need really to see a sharp peak. So even we have something, there is something longer term in place. Just using that kind of data we have been using here for that analysis, so 850 days, give not us any clue on that long-term daily cycle. So we need to increase the amount of data points using here, but I will do that later. So that's first important point. And by the way, that cycle was also not picked by our co-pilot here we use for identifying dominant cycles. Now let's move to the that lower end of that spectrum where we have the shorter term cycles. And there you will find that peak here, which is quite more or less a perfect peak in the spectrum, because we have a very sharp peak here. We have a very high strength score. So the triangle, the size of the triangle is very large. We have also a green indication, which means the Bartel score is very high. So we have good statistical significance of that cycle in the data set. So this is how you would like a perfect identified cycle to look like. And if you look into the overall list here, this is also chosen as cycle ranked number 1, from our co-pilot here to use that cycle. So we have a good Bartel score, the highest strength, and a perfect shape in the spectrum. So that's why it's ranked as the most important cycle. However, I really don't like it so much because we're talking here about a cycle with 40 days. So 40 days, it has a length of 40 trading days, meaning 20 days to the upside, 20 days to the downside. So I would count this quite a short-term cycle, but you need to judge from your training experience. So I showed you what's the worst, what's the best cycle to pick from that spectrum. Let's just go with this very, very short-term cycle, and you can already see from the longer-term price behavior that's very hard to really identify. There are even other shorter cycles maybe which could influence here. I mean, here we have a good, this bottom, this top, this bottom, this top. So, but yeah, it's too short in my perspective. Might be there might be some rhythms. You could add it to stack it up to a composite. So looking for cycles within cycles alignment if you use more cycles. And then you should also spot if this 40-day cycle maybe is forming a low and a bottom, but not as an isolated cycle. Of course, too slow here. So, okay, let's switch that. The other interesting cycles are these 3 ones here, which I think from a daily perspective. So 74 days, 85, 107 days. So that's at least the basic idea to be used here. So let's give it a start by using these cycles here. So okay, let's just try to put our chart here. First, I will review them one by one. So this is the 74 cycle. Let's now use the 85 cycle, which is still in the upswing, continuation into April. And as the third individual cycle, let's lose the 107 days, where the top is also in April. Okay, so just looking at all these 3 cycles as individual cycles, the shortest one here with 74 days is close to topping. By the way, you also can spot this by the red dot here. So it's indicated as orange with this red dot here to the right side. That means this cycle is short or close to changing its direction. So it's forming a top here. The 85 cycle and the 107 cycle, they are indicated green. So these 2 cycles are still in their upswing phase. So by just looking at the color, the 74 is close to topping, 85 still upward, 105 still upward. So without the visual shape, you already see from just looking at the colors, there seems to be short-term continuation to the top, which if you use the latest one here, 107 days, might come to an end, timing perspective, in April now. So we have maybe some weeks to continue the upswing here on the daily, at least from the short-term cycles. Now let's combine these 3, but I think there will be no surprise by doing that, which will give you an average, which is then for the next top to look out in, let's say end of March, 2 weeks from now. Or is it 2 weeks? Yeah, maybe 2 weeks from now. I would, if we have that kind of situation, so let's now have a little bit better shape here. So you see that the cyclic RSI also has chosen the length of 74 for that indicator setting, which was the shortest dominant cycle here. So we have now crossed the upper band here, but the slope is still pushing upwards here. So once we cross above that band, it's more or less just a confirmation of that upswing. So from a cyclic perspective, we are in the upswing. We have now very positive bullish momentum. This situation will change once this indicator line here starts to move down. So then we really need to be on alert when this happens. And once so until we are moving up, everything is fine from the bullish perspective here. Then at some point in time, the signal line will start to turn down. That's exactly the point in time when you need to be on alert or be prepared. That I think is the upper band. And then the trigger is issued once the signal line crosses below the upper band. That's from a technical point of view. Yeah, that's exactly the trigger point from the technical analysis you will be looking for. And if this happens end of March, then we have more or less the perfect condition we are looking for. And Epis, I already see that you're proposing use the mining ETF, which I will do. So next we will have a look also at the gold mining stocks or using the gold ETF, the GDX for that. Thanks for mentioning that, Epis, by the way. And I will switch to that. But Florian, also getting back to your question. So give me a second to clean up the chart and let's bring in some questions as I see you're already starting to pull up. Give me a second. So Florian, can you argue that you should use the cycle of about 300 days since in the weekly analysis the 60 week cycle is the second most dominant? That's a very good argument, Florian Meyer. 60 week multiplied by 5, so 5 trading days brings us to 300 days. You're right, and the 60-week cycle, you are absolutely correct spotting that. So we had here, so I mean on the weekly we analyzed I analyzed the very long term. So, but there's also the 60-week cycle. So this is what you're referring, Florian. We have a dominant cycle on the weekly with the length of 60, which is close to turning down, correct? Which is similar to the 300-day cycle. So this is what you are mentioning. That's interesting. So we have that short term. Okay, so let's make that. So Florian, I will phase out your question and then stay on your topic for a second because that wasn't a good question. So let's stay on that. So I have now switched to the weekly for a second here because Florian pointed out that we have here a shorter term cycle in the weekly series. You can also see it in the spectrum, maybe 60 or 67. We could also switch between these both, but it's a nominal cycle about 60 weeks. So I have not talked about that. And just using that 60-week cycle, first of all, you can check the alignment here of that. This would give us a current cyclic top with that shorter term, long term cycle. So being careful with that analysis because, as I said, I think there's a huge difference in amplitude comparing that to this 243-week cycle. So that's the only caveat, Florian, I want to add to that. As I said, there's this huge difference in the amplitude here, that there is a shorter term cycle, absolutely agreed, by 60 weeks. But this 243-week cycle, and you see that in the composite analysis, has a much stronger amplitude in total. So looking at that, it would be interesting to see because the period now from April to September, yeah, that's I think where these two cycles interact. So we have the short-term weekly cycle, which will point down, yeah, in that time frame, while at the same time this long-term cycle is still with a very strong upward force in place. And if you add this on top of each other, yeah, this will show you more or less a sideways momentum now for the summer period, while the underlying long-term trend is still upwards. But now bringing this to the daily analysis, so it does not change in total. I think it does not change the long-term perspective, but bringing us to the short-term, here, the short-term analysis, where Florian, you mentioned the 300-day cycle, which from just looking at that spectrum here, and that's important, just if we just had the daily, yeah, and that spectrum would not allow me to pick a cycle with these, and in that case, 291 days. With the knowledge from the weekly, where Florian highlighted our attention to, where we know that there is a 60-week cycle, we could assume, okay, it's around 300, yeah, 300, maybe 67, could be a little bit longer. So we need to be careful taking the length into account here. So we could stack this up. So I will now add this 291, or let's call it a nominal 300 trading days cycle based on our weekly analysis. You see what this will then bring to our composite analysis. So even if we add the 300 days cycle, we will stay at the main outlook above or for an expected top end of March. Yeah, so I can add that or even deactivate it. So have a close look now how the shape of the composite changes while I will deactivate that cycle. So the next expected turning point is 26th of March. And if I add now the 291's 300-day cycle, it stays more or less end of March. So that's, I think, thanks for spotting that, Florian. Our short-term analysis will not change. I can also only add this. That's the 300-day cycle on its own, yeah, which just looking at that long-term cycle might continue the upswing into May. So just from a short-term perspective, we have analyzed these 4 cycles: 74, 85, 107, 291, and all three are in the continuation into their topping window for end of March, April, latest what is here, May. So timing wise, this is not a top, this is building a top in the context of the longer term cycles. And I think everything is valid, which we discussed here. So you need now to have a close look on the technical situation, what happens to price. The perfect top, timing-wise, could be expected end of March, April, May, but we need to redo the analysis. So maybe gold will continue to rise now for the next 2 to 4 weeks. At least we are currently in that condition. So last but not least, I promise, Epis, and you also brought that up. So thanks also for that indication. Daily shorter term and analysis of GDX and is much more clear than gold itself. Yes, I wanted anyhow to do that, Epis. Thanks for mentioning that. So let's now switch to GDX, so the ETF for gold mining stocks. That was my previous analysis here. So where we now have a look to the mining stocks daily short term. So the short term is clearer now. So yeah, and now I think you also get an understanding how these different assets, weekly futures, gold miners, different spectrums on different views. So 60-week cycle, the 300 days was not clear on the daily. But here we also have a more clearer view on a cycle with the length of 300 something, which is showing a peak here in the spectrum, right? So in that case, 341 days, which, and here we have maybe a different picture, but we are not talking directly about the gold price. We're talking here about the mining industry, which depends on the gold price for sure. So let's start with that. Yeah, and by the way, it's also highlighted as most important dominant cycle, ranked with score number 1. So also our artificial intelligence would use that one first. Let's activate that. Let's overlay that. I did a longer term analysis here. Let me zoom out here a little bit, which works nicely for that cycle in picking the important bottoms and tops here for the past 6 years, which is quite good on a daily period. Yeah, and that cycle here is currently bottoming, so which is a positive outlook for the gold mining industry, which has now also moved into a positive phase here. So maybe now the golden period for gold mining ETF starts at that point, at least from a phasing perspective of that long-term cycle, which is in alignment with, and that's now which brings everything together from a long-term gold futures analysis. It looks still positive, even though we have this 60 weeks cycle close to a top, but the daily analysis suggests this cycle will not top before May. The gold mining long-term daily cycles have also now turned into positive, which is also another positive confirmation. And I want to point here your view when these indicators gave also confirmation. So here you see, to make this even larger, so here we had the confirmation, these 2 points here to the upside. So we currently now issued a short-term buy signal for the miners. And you see this has not happened since 2022. So we had no buy signal in 2023. It's the first time now we have a buy signal for the ETF miners, which is very positive. And you also see that the last sell signal occurred here exactly at the tops back in that these two tops here occurred exactly at these points in time. So April 2023 and May 2023, we issued the sell signal. And you see just from the technical indicator, there was no signal in between. So which is quite nice if you want to have clean indicators without any whipsaw signals. And yeah, we have now entered this positive technical situation, which is confirmed with an expected longer term cycle to the upside. We can now pay attention to some shorter term cycles. We have here, I mean, it's not, I don't like that peak here. So we don't really know if the peak is at 207 days or maybe a little longer, but there seems to be a nominal cycle around 200 days. For a moment, let's clean it up. Sorry, there's too much now on the chart. So let's clean that up and let's bring in the second ranked cycle here. You see it to the right. So the 207-day cycle, which is here in the spectrum. Yeah, that's the 207-day cycle. Let's put that cycle to the chart, which still has room to go to the downside. So if we add these two cycles here, this suggests, I mean, we are arriving at, that's the interesting read away here. So we are now close to the bottoming window. But, and if you read that uplick here, then a huge upswing cyclic force will come into play. You see that where we have these small bumps here just around resulted more in a sideways movement. While when we had these, or when both cycles are in alignment in regards to their phase, which was here, we had this huge downswing, and here where we had this clear upswing, you see the big moves. While when they phase out each other, which we've seen in 2023, we get more these sideways movements. But we could expect that they realign their faces to the upside starting in April or end of March, which gives even more positive outlook into the future. So looking into the April period here. So this just confirms a nice entry point for that mining sector here. I mean, there are a lot of shorter term cycles if you see them here, but it's really not clear which one to choose. So I would not pay attention to smaller cycles on the mining sector. But to be honest, that's it. So let's do a quick recap on the gold cycles here. So let me start quick summary before we'll get back to your questions. I will not ignore them. So, long-term gold futures seem to be in the long-term upward cycle phase continuing into 2025. That's the long-term projection. We need to pay attention to a maybe 60-week cycle, which brings in downward momentum. Transfer that to a daily cycle analysis, analyzing the 3 dominant daily cycles on the gold futures price gives us a possible next upward timing window for April to May, which means the continuation of the current upswing into April, May. After April, May, we see negative daily cycles. Adding now the gold mining ETF into the mix, this suggests that for the mining sector in the gold industry, they are in the bottoming situation with much more positive outlook going into the future, so April, May, and onwards, which would be in alignment with rising higher gold prices from the asset per se. So that's the summary, how I would read this 20-30 minute cycle analysis. I've shown you also the indication what to look out for on the technical indicators. Now it's time for sure to have some time taking your questions into account. That's why we are here. I already tried to pay some attention to your questions. So let me review your questions. Joe, Juice Box Boy, does using the LBMR gold from Quandl data give a different analysis? I would not assume so. So it's not the gold futures, it's the fixing, the London fixing for gold, but using cycles should not give you a different cycle analysis than using the futures. I've just switched to the futures because the data is more easy to analyze than the London gold fixing. But as said, you should get the same analysis. Now, Bobons, you rightly spotted that for the GDX, so the ETF analysis, and Andrea, you also confirmed that, I used much more data points. So therefore, let's jump back and let's discuss that as you have clearly spotted that. So you're quite good. You're even getting better. I think that community will already help me now getting into it. So but first let me clean up the chart. So if you would, you don't see it. If you would start with that kind of analysis, and Andrea, Bob Hans, let me move out your question so that we have a cleaner screen. Let's reload the data set. If you would do this freshly with the fresh chart. And just bring in that data set. Let's reload that analysis. This is now the ETF starting with 850 bars, which is the standard configuration and the basic setup once you load an asset into the analyzer. So this is the standard setting. I think this is the minimum length. Why is this the standard? Because I think that's the minimum length to start your cycle analysis with. If you add more and more longer term information, there are pros and cons in doing that for your projection. I often refer to that. And here I had a special reason to add more data to the analysis due to the fact that if you have a look at the spectrum here at the bottom, so what I really doesn't give me any clue is that flat plateau here, which I would say I cannot see any individual cycle, but from this huge amplitude and this very slow drop down to the right, there is something in the spectrum. There is something. Otherwise, we would not see this huge bump in the spectrum. But just using these 850 days is just not enough to allow the cycle scanner to identify the length. Yeah, it's just there is something. However, the offset, yeah, if we go to the next lower cycles, which are listed here, is so huge. Yeah, so that difference is so huge that first I'm more interested that I'm more interested first to get more information around that spot here. And that was the key reason why once I loaded that asset class to add more data, more historical data. So how do you decide now how many data points to add first? You can always add or load more data from a visual perspective, which, and as you see it here, this will not change the spectrum. Yeah, only the dark blue information is used for the spectrum. So even though I loaded more data in light blue, it has not been used by the cycle scanner. So now you need to go into the past, as we want to add more data points, and look out, and that's the rule now to decide to look out for important tops or bottoms which occurred in the past as a starting point for the cycle analysis. And this is not enough. So, I mean, you could argue, then let's start the analysis here, but then we are just adding 50 data points to that analysis, which will not make a difference. So there is no real key low to identify here. So then the next interesting point in time is here at that top, and that's a nice top. So we have a peak to the upside and to the downside. So this is a good starting point in the past to let the cycle analyzer run our cycle analysis, which is then going into May 16. Yeah. So therefore, first thing, I would now switch the starting point to this point in time and rerun the analysis, and boom. That's just what I did. And that's exactly the spectrum we just discussed for the GDX ETF analysis. And the outcome, that's now, you see that before we just had a huge bump here on the right on that spectrum here. But now by adding more data, you really see there are two, maybe even three, there are two longer cycles. While bringing in more data to the analysis, now we have been able to detect these two cycles by just using the 850. It was trying to bring these two cycles into one cycle in the spectrum, and this gave this flat plateau. So the analyzer was not really able to differentiate between these two long-term cycles. But as we have now moved or shifted the starting point more into the past, the analyzer is able to differentiate in this huge bump we've just seen before. So thanks for bringing up that question. And I think that's also a key reason when you should add more data to your analysis. So not by default, more data is always better. Yeah, because for the phasing analysis to the right side of your chart, so into the future, it gets worse and worse the more data you add. So therefore, I would always be careful adding more data. But I hope I explained the reasoning, especially in the GDX case, why I added more data. Otherwise, we would not have been able to identify these two cycles. Okay, that's for that question. Bob, Hans, and Andrea. Yeah, Adrian, I totally agree with you. It would be helpful to have the ability to display more than one sine wave. I used it just to individually activate just one, but you can then only plot one, and you're right, the composite is just the aggregation. The individual cycles would also be useful. It is on the to-do list. It will show up. It's just not there yet, but your proposal is absolutely right. Brett, maybe a topic on, let's switch here a little bit. The genetic algorithm, what we're currently, as a next key area also in the foundation, we will further look into artificial intelligence, but machine learning, or I worked on that already 15 years ago, where it was called genetic algorithms, as deep neural networks, genetic algorithms. This is how it has been named 15 years ago. Today you called it artificial intelligence. And we have some of these algorithms available. We will work on that and also make that public in the foundation as one of the next steps. So in the past, it was just available through older tools, but these tools are outdated. So the key topic is we just don't want to make outdated tools or technologies available to the FSC. So we will rewrite, recode, bring this into the modern AI ML frameworks, because there's much more than just genetic algorithms. In today's world, we have much more deep learning algorithms available. Once this is done, it will show up here. For now, the genetic algorithm is just an outdated older one. Adrian, your question, how can you import the maximum, or how can you import the maximum amount of data points in a weekly analysis? Often I only get the last 5 years. The standard procedure, first it requires that by using Yahoo Finance Wrapper, also there is more data available for that. If that's the case, the following principle should be used. I don't know. Yeah. And if you want to load more data for GDX, I think it will not work because they still don't have more data. But let me show you the general procedure. Let's start with the basic analysis. So if you, the key is here that you use the range information, and then you can switch at 1 year, 3 years, 5 years, or maximum. Maximum will only load what is already there. So the key is the +1. So let's assume you have 3 years loaded, or this will be the same if you have 5 years loaded, or even the maximum will not give you more data. You should try the +1 year. Let's make this dark blue first. So if you click +1 year, it always tries to load additional 1 year of historical data, which in that case worked. And then you can click +1 year again, because it's then always wants to add another year and another year to that chart. At least that's the basic principle, and it does not apply to the 3 years or 5 years button. So please try the +1 year, but you refer to the weekly now. So, but it's the same principle. So by using the weekly, the same principle. So now going back to 2008 here, try to load an additional year. So +1 year, you will see now it has added a year into the historical perspective. And then you need to repeat that procedure. Press +1 year again, it added another year. So that's different to the 3 year or 5 years, which +1 year will always try to grab another year of historical data and then add it into the past. Hope that helps. Maybe I've not been so clear, but try that please first. No. Bob Hans, at least thanks for raising that topic here. So what I really try to do, and that's why I want to refer to your question, I really try to always introduce objective, clear framework, how to pick cycles and how to not pick cycles. So there are what I just introduced today is with the 850 and extending the historical data when there are reasons not to stick to the 850. And there's a clear rule. When you don't see cycles in the spectrum with the standard objective approach using 850, don't use it. Add more historical data points until clear cycles come visible in the spectrum. So that's a clear objective approach here. for sure, it's not always the same. And that's what psychoanalysis, and maybe to bring today's session to an end here, that's what makes psychoanalysis a complex beast and not so easy. And Bob Hans, there I agree. So to judge the reason for extending data, using a cycle, and there I agree with you, it's not always black and white. So there is no clear rule set 1, 2, 3, 5 to go with your analysis. There's this, I don't know, this gray zone or the knowledge of the analyst, which is not always an algorithm which everybody else can use. So there I agree, Bob Hans. So therefore, excuse my no, I have not introduced arbitrary analysis. I tried to explain objective rules, but yes, you're right. It's not a simple a rule set you can apply. And therefore, Bob Hans, it's an important point you raised, why I switched to the 1.9. I hope to try to give you a reasoning for that. And that's really maybe, as I started, maybe I won't give you a quite so clear analysis, but I think the outlook was clear in regards to what I expect from the price to happen. But psychoanalysis is also a kind of, I would not call it kind of art. So we really try to make it more and more objective. And that's, to be honest, that's the purpose why I'm here. At least I try to give you clear objective rules how to use it, because it's much more than just pushing on an algorithm. But we are not at the end of the journey. So there is more to identify, more to learn, to make it more objective. So we are here to make psychoanalysis even more objective. So there I absolutely agree with you, Bob Hans. And maybe that's a good closing words. We are already live here for over an hour. No, not over, but close to an hour. So thanks for your intense discussion. I like that kind. So please do us a favor, like the channel, subscribe to the channel, click the notification button. This helps our cycle community to grow. And this is what we want to achieve. So you can help us in doing that. Otherwise, please join next week, Monday, same time, same place. And let's see what happens outside. So thanks for being with me. Have a nice week and see you soon.